And thank you so much. Wow, 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 wow. Last weekend, I was in Apostolic Church, Atlanta Central, and we had a wonderful time together. That was the Saturday and the Sunday. I was with them in person, educating financially. Thank you so much. We thank God for today. And I thank you, Pastor Bediaku. Thank you, all the leaders of Change Makers Church. I'm so grateful to give me your platform to be able to share this life-changing information with the church. I'll put my number in the chat before I even proceed, because last week I was told that some people were trying to get our numbers and they went asking for our number. So I'll quickly put my number in the chat, since we have, for HIPAA reasons, there are so many questions we'll not be able to answer here. So that afterwards you can get in touch with me and we do one-on-one. So without much ado, if Elder will permit me, I'll share my screen.
Yes, do that now. Can you try to share now?
Okay.
Yeah.
Thank you, thank you, thank you, thank you. Thank you. All right, all right, all right. So my name is Joyce Anson. As Elder said, I'm a licensed financial professional in the state of Georgia and a few other states. I would like to start by asking a question. Have you ever heard of the saying that in this country, the rich do not pay taxes? Only the middle class pay all the taxes. But the truth is that those with financial education, they end up not paying taxes. But those without financial education pay all the taxes. So the church, the difference is the presence and the absence of financial education. So I have entitled tonight's presentation, Fighting Financial Ignorance, Financial Miseducation of the Middle Class, and why 95% of America end up poor, how to fix it. So currently, I'm licensed to work with 150 plus, 40 plus companies in the US and Canada. Please, church, do you recognize some of these companies? I believe most people here, you recognize most of these companies. These are multi-billion-dollar companies in the US. And you see the same companies, they keep our 401ks, they manage our 401ks, IRS, Roth IRAs, 529s, if you get me right. And because the screen is too small for the 140 plus companies, you not see all the companies here. But these are also financial services we help you with. We have Legacy Shield, planning your estate, that is your will. We have Debt America, it's a debt and tax relief. We help you do that. There are some debts that we can help you slash into half. We have the health cost sharing, that is Liberty Health Share. This one, we help you get very reasonable health insurance, both home, car, and pet insurance at a very, very reasonable rates. Build an agency cash flow. We also help you build your own business. And then we have the $1 million baby. I'll be pitching my tent here tonight. Mostly in this country, the rich, the affluent, As soon as they give birth, they go to the bank and ask Jennifer, I would like to open the 529 account for my child. Little do they know that that 529 later works against the child's going to school in another state. And it has some disadvantages I'll be hitting on later. Everest, that is a funeral concierge, and a will prep, that's an insurance you can do to cover the final expense. And then we have one solution, that is a term with living benefits. Then we have return of premium. Yes, one pays money up to a certain time. If they don't pass on, that money is returned to them. Their premium is returned to them. Then we have the guaranteed issued final expense. That is also a funeral concierge. It's also a baby company. We all know the Geba baby products. And they also have a whole life insurance that you don't need to get the health physicals for them to give you that whole life. Then we have the IUL. This is my main reason why we are gathered here tonight. It's a tax-free retirement account. Somebody will say, is there a tax-free retirement account in this country? Yes. I will unveil more on that as we go on. Then we have the fixed index annuity. It's also a pension plan that most people put in place, that when they retire, they take this money to take care of themselves. And then we have legacy planning, that is also two insured on one policy. Until the last person passes on, the beneficiaries are not given money, whatever they have to get. Then we have the Key Solar Executive Plan. In this country, we see Walmart, JCPenney, McDonald's, all these companies are spread, they are all over the place. But one thing is, they have a plan in place that when the CEO of that company passes on, another CEO comes in, and this money, this account kicks in to help them train another CEO to take over the company. That is what we call Keyman Solar Executive Plan. Unlike mostly our African shops, as soon as the owner passes on, you see that they put closed at the door of that shop. And when you go to long-term care, most people in this country, as soon as they start working, as early as 25 years, they put this plan in place so that when they are old, they are not able to do the 2 of the 6 activities of daily living. This money kicks in to take care of them. That is why we see most people going to their homes to take care of them. Now, preparing for life journey. Does your portfolio have all that you need? I want to show you where the top 5% of this country, the rich, the affluent, are keeping their money. So, the financial successful people, they consider certain things. There are 10 things they consider before putting their money into any bucket. The first and foremost important rule is make money, but never lose money. Rule number 2 says, never forget rule number 1. What does rule number 1 say? Make money, but never lose money. Management versus no management fees. Are you paying? Do you want to pay somebody to manage your money for you? That is the question. None of us sitting here wants to pay somebody to manage our money for us. So, inflation is 3%. Are you earning that on your money in the bank? Avoid double taxation. Do you pay taxes on your paycheck at work and paying taxes at on your money, wherever you have put your money in the bank or the bucket that you are putting your money in? Flexibility, liquidity. They also look out for where they can easily get access to their money and where they can easily put money and withdraw. Then we have compound interest. That is where I'll be pitching my tent tonight as well. We have social security. There's a hidden agenda. We'll talk more about that. Critical chronic illness, the #1 cause of poverty and bankruptcy. If you know it, you avoid it. But if you don't know it, you pay it. Now, we have NEST, estate and probate court system. You ask me, what is NEST doing in financial education? Yes, we'll talk more about that as we go on. So, we go to the next slide. Before we go to the next slide, I'll talk about this man. Warren Buffett is a great philanthropist and also did a lot of investments. He also took his time to study about money. And he came out with these 2 rules: never lose money, never forget rule #1. Now, so long as you live and work in this country, your money is sitting in one of these accounts. You can ask you know which accounts you have already. That's a question to you. I'll ask Elder, which of these accounts do you have?
Checking, savings, 401k. So that's 1, 2, 4,
Thank
and
you.
6. Yeah.
Okay.
And 9.
Okay. Good. Thank God for Elder's life. So we have checking account, savings account, money market account, certificate of deposits. Most people go to the bank and lock their money in the bank, a fixed deposit for 1 to 5 years. We have 401k, TSP, 457, 403B. Then we have independent retirement account. These are tax deferred accounts that we have in this country, so that when the person is 59 and a half, you can get access to your money. Then we have the Roth IRA. You have already paid your taxes before putting your money in this account. We have the stocks, the Bitcoin. Most people go and buy this stocks and Bitcoin to grow their money. Annuities. We will talk more about annuities. We have 2 types of annuity that we'll be talking about. We have life insurance. That is also a bucket that the rich and the affluent consider a lot. So we have different types of life insurance that we'll be talking about today. We have bonds. And the government, when they are in need of money, they release bonds into the system so that for 10 or 20 years, so that the people go and buy that bonds for 10 or 20 years. And when it is matured, they go for their money with the interest. Then college funds, I spoke about that earlier on, about the rich, the affluent going to the bank to open this for their children, but later on works against the child's college. Then we have social security benefits. There is a hidden agenda, which is by the federal government. There's a hidden agenda. We'll talk about that later on. Then we have pension. Then that is by your company. The 14th one, which never appears on my screen because my screen covers that one, and we have Susu Wamu Chama Injangi, which we carry from our various African countries. In my country, Ghana, we call it Susu, and other countries also call it Wamu Chama. We have left our own country and come over into another country, but we still go back using the very systems we used to save money. Now, what did Warren Buffett said in rule #1? Elder, can you tell us?
Make money and never lose money.
Thank you so much. So in this, your checking, your savings account, the money market, your CD, you never lose your money. If you put 10,000 in that account, you go there and it's the same money. So, but the 401k, your 457, TSB 403B, IRA, Roth IRA, Roth 401k, stocks, Bitcoin. They are, when was the last time, Elder, you checked your 401k?
I think I check like every quarter.
Please, had you made some money?
The last 12 months has been very good, yes.
Thank you, thank you. That's very true. The market has been very good for the last 12 months. So all the red checked accounts, you make money and lose a lot of money. Maybe you are going to work, or as you said, the last few months, you make money, but you see that another few months, you do what? You lose money. So you do what? You make money today, tomorrow you lose money. Index, but the story is different when it comes to index annuities, life insurance, municipal bonds. You make money, but you never lose money in this green check accounts. The college funds is also in the variable markets. You make money and you lose money. Now, paying management fees. Elder, do you want to pay somebody to manage your money for you?
Sometimes you don't have a choice, but ideally not. No.
Thank you, thank you. That's a very intelligent answer. So you're checking your savings and your CDs. You don't pay anybody money to manage your account, for, your money for you. But the 401k, 457, TSB, 403B, IRA, Roth IRA, Roth 401k, stocks, even the college funds, somebody sitting somewhere you don't know is managing your money for you. So assuming that you have 100K in one of these red check accounts, and you are paying the person 2% on the 100K each year, how much will it be in a year? 2% of the 100K.
I think that is $200 or $2,000.
Clever. That's very, very. Thank you, thank you, thank you. So you are paying somebody $2,000 every year for maybe you are working for 30 years before retiring. How much would you have paid to that manager?
$60,000.
So in 30 years, you'd have paid 60,000. That's money that you can keep for yourself and for your family, correct?
That's right.
Yes, if you were not paying that management fees. But in the green portfolios, you earn index annuities, you make 5%. Life insurance, you make 8%. Municipal bonds, you make 4%. College funds is also in the variable market. So you lose gain, you pay a management fees. Now that you know where you pay management fees and where you don't pay management fees, where would you like to grow your money? So inflation is 3%. So interest rates is more than 3%. In this red check accounts, you're checking your savings. Sorry. If somebody is writing on the, can you please allow my screen to run so that you don't write on it? Thank you, thank you. Thank you. All right. All right. Inflation is money depreciating. It is also considered hidden taxes. in average, prices of goods and services go up every year, 3%. So assuming I buy this pencil, $1, and next year I go to the same shop to buy this pencil, it will be $1.03. The apartments that we live in, most of the apartments, the one I took about 5 years ago, today that's which was 1,250. Today that same apartment is 1,650. The grocery shop before the COVID, I remember I used to go to the shop with my son, and we used to fill the cart with $100. But today, when I go to that same shop, that is Walmart, and I want to fill the cart, I have to use how much? $300 to fill the cart. Then the gas before COVID was $1.05. Today, the gas is $3.45. So the college tuition, most of us on this platform, either our children or yourself, when you went to college, it used to be maybe 30,000 for the whole year. But today, when you go to most of the colleges, it's $86,000, depending on where you go. Now, what it means is that if your portfolio does not give you more than 3% in interest, you are losing money, correct?
Correct.
You are losing money to inflation. So how much interest do we make on the checking, the savings, and the CD? Can Elder tell me how much you checked your savings account? Did you get more than 3%?
No, I did not.
All right, you get 0.001. And then the 401k, 457, TSB, 403B, IRA, Roth IRA, stocks, Bitcoin, and even the college funds, they are all in the variable markets. It is by hope and prayer. Stocks, your annuities, index annuities, the story is different. You make money more than the 3%, which is 5%. Life insurance, you make 8%. Municipal bonds, you make 4%. When you look at this table here, the comparison of the historical performance of S&P index and IUL, you see that 2000 to 2002, the dot-com crash, a lot of people lost their homes, they lost their mortgages, they lost their jobs. And then the 2008, you know, it was the housing market crash. If you were here by then, a lot of people lost their homes. And then every 4, 5 to 6 years, there's a crash. Even 2022, Russian and Ukraine war, a lot of people, there was a loss in the market, which is 19.77%. Now that you know where your account is affected by inflation, where you make more than 3%, where would you like to grow your money? Now, taxes or no taxes on interest in your checking, your savings, and your CD, your 401k, your 457, 403B, IRA, except your Roth IRA, you have already paid taxes. Your stocks, Bitcoin, annuities, you pay taxes. By the way, Elder, your money from your paycheck, did you pay taxes before putting your money in the bank?
Yes.
So that same money in your bank account, you make 0.01. That small interest that you make, Uncle Sam comes after your back. Your heels to pay taxes on that little interest that you make, correct?
Correct, yes.
Yes. But even the interest you make on your CD, you pay taxes. Your 401k, you pay taxes when you are 59 and a half and you are going for your money. Your 457 and 403B, IRA the same, you pay taxes. So is it cheaper to pay taxes now or later?
Later, you want to defer it later till later.
You want to pay your taxes later. Is it cheaper to buy things when they are on sale or when they are not on sale?
Yeah, taxes is definitely gonna go high, so it's probably better to do it now.
Is
Yeah.
it cheaper to pay taxes when buy things when they are on sale?
Yeah.
Elder.
It depends in the future if you're a Republican or a Democrat. Democrats like to increase tax. I think Republicans try to keep tax low. So it's all policy dependent. Yeah.
Okay, thank you. So I have a scenario to do for you to see. So assuming I ask you, Elder, to pay taxes, I have this whole grain of corn. And assuming I ask you to pay taxes on this grain of corn, so that when you harvest the whole load, truckload of corn, you don't pay me any taxes. Then the second scenario is, assuming I give you this corn, I said, don't pay taxes, plant it and go and harvest the truckload, and then you pay me taxes. And which one would you prefer?
Yeah, in that scenario, I think the point you're trying to illustrate is it's probably better to pay it now because it's on a smaller base than when it grows and then you pay it on the full base. I think that's the scenario you're trying to paint. But
yes, so we are all doing the same thing, which is the second one, by doing the 401k, 457, 403b, the IRA. They are all tax deferred accounts, correct? So we are doing the second scenario. And some of us, when we were financially were ignorant financially, we used to go to our HRs and say that, oh, the company is matching us 4%. You make ours 15%, so that you think you are saving more money in your 401k and avoiding paying of taxes. But later on in the future, you pay more taxes. So now in this scenario, is this cheaper to pay taxes now?
Yes.
yes.
The Roth IRA, the Roth 401k, it's you pay taxes before you go and before you save your money. The life insurance, you don't pay any taxes. Municipal bonds, you don't pay any taxes. College funds, the 529, you don't pay any taxes. So now that you know where you pay taxes and where you don't pay taxes, where would you like to grow your money? Access to cash, penalty free. In your checking and your savings account, you have saved your money in the bank, you go to the bank, you get access to your money. The CD, you have locked it for 5 years. If it's not mature, then you go and you want your money, you pay penalty. Anyway, by the way, Elder, can you just walk to your HR and ask for your 401k when you're not 59 and a half?
No, you cannot. You cannot access.
Yes, you can only take a loan from your 401k, but if you want to take all the total amount of your 401k, you have to pay a penalty. Then the IRA section 72T allows you to take 5% of your money, but others in some states, not all states. The Roth IRA, Roth 401k, you pay penalty because it's a what? It's a 59 and a half rule applies here. You pay penalty if you are not 59.5. The stocks, the Bitcoins, your own money you went to buy the stocks with. Annuities, as I said, we have two types of annuity. We have the qualified annuity that you roll your 401k or your 403b over here to this qualified annuity to lock your money at the floor of the index. And then we have the non-qualified annuity. That one, it's your money in your checking or your savings account that you want to come and grow in the non-qualified annuity account to grow your money, to get a percentage on your money. And then life insurance, you easily get access to your money depending on what type of life insurance you have. And then we have college funds. If the child is not up to 18 years and ready, the bonds, as I said earlier on, is either 10 or 20 years. If it's not matured and you go for it, you pay penalty. College funds, the 529, the PPT, SP, all these school college funds, if you don't wait for the child to be 18 years and ready to go to college, you pay penalty. And it also works against the child going to college, depending on which state the child is. There's some states prevents the child from crossing the state borders to go to college. So they'll say that if your child is in Atlanta and the child is going to school in college in Boston, they can just say that the money stays in Georgia state colleges. It doesn't cross the border. So in that wise, that college funds, the money might have to stay in the account. They might only give, depending on the state, they might only give a portion to that child to go to school. And then if the child gets a Pell Grant, wants a Pell Grant, with this college funds, they will say that you already have a college fund in place for your child. The child might not qualify for the Pell Grant, which is a national cake for all parents, taxpayers. And then also another thing is if the child gets scholarship, this college fund will not be given to the child. They'll say that the tuition of that child has already been paid. So that money stays there. So now that you know where you can access your money without penalty and where your money, you cannot access it penalty free, where would you like to grow your money? Now, this is a very sensitive slide. I love so much. And I love Warren Buffett. Warren Buffett, he's a great scientist who took his time to do a lot of research work. And he also said, let me study about what? Economics. So he went about studying economics and came out with this rule. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. I would like to ask Elder, please, do you have a mortgage?
Yes, I do.
You already enjoy compound interest.
You enjoy? I don't know if it's enjoy or suffer. I don't know. But yes.
So you're enjoying compound interest already. Do you have a credit card?
Yes, I do.
You're already enjoying compound interest. If you have a student loan, you're enjoying compound interest. So how would you like, if you are enjoying compound interest in all these areas, this man is giving the two of us 100K to grow in this simple interest account and the compound interest account. So the first year, you are simple interest and I am compound interest. Let's assume, Elder, you don't know compound interest. So you have the simple interest account and I have the compound interest account. The first year, we both got 10,000, correct?
Yes.
Okay. So when you look at the second year, you have 20 and I have 21. And you know the secret of this is because the simple interest account grows only on the principal, which is the 100K that has been given the two of us. But the compound interest account grows on the simple and the principal and the simple interest. That means it grows on two pivots, correct? Or somebody will say it's growing on two steroids. So at the close of the day, let's see how this compound interest account grows as we get to the 30th year. Elder, you have 400 in your simple interest account, and I already have 1.7 in my compound interest account. Can you give me a guess for the 40th year?
Oof. About 3.2, maybe.
That's a good guess. But how much do I have?
4.5. Oh, 500.
4.5. And
Yeah.
you have 500 in your account, correct?
Mm-hmm.
Okay. So this is what the banks do to our money. When we take our money to the bank, they leave 10% in the account and take the 90% to a compound interest account to grow the money and use the interest, put some on credit cards for us and give it back to us with a higher interest. Correct?
That's right.
Some even go as high as 23%. So now that you know where you can grow your money with only 10% interest, and you want also to get this compound interest account. If you have some 20 to invest, maybe the 20K is lying in your bank account. Do you know where to go for compound interest growth? We'll talk later on. Let me reveal that compound interest account to you. The only two accounts that grows uninterrupted compounding is fixed index annuities and life insurance. Your checking, your savings, your CD, your 401k, 457, TSB, 403B, IRA, Roth IRA, stocks, Bitcoin. Even the child's college funds. It's what? It's by hope and prayer. The bonds you have locked it for 10 or 20 years, so you don't have any problem there. So now that you know, where would you like to grow your money? Now, we have, this thing is covering my screen. Let me just move it down a bit. We have provisional income and danger of social security taxation. So in this country, the moment you are about to retire and you send your application, you send your application to Social Security that you are retiring and that you want to get your Social Security. Do you know what the government do? They go into all this, your checking, your savings, your CDs, your 401k, TSB 457, 403B, IRA, except Roth IRA. They don't check that one. Your stocks, your index annuities, that is the qualified one, the one that you rolled over your 401k, except your life insurance, the bonds, even sometimes the 529, that's why it's checked yellow. They check all the red check accounts. And if you are able as a single person to take 25 to 34,000 home to spend in a year, they will tax you again on your Social Security money that you earn. They will tax you 50% on your Social Security money. And then if you're a couple and you'll be able to take home 32 to 44K in a year to spend, they'll tax you 50% on your Social Security. Now, if you are single and you'll be able to take home more than 34K in a year, they will tax you 85% on your social security that you earn. If you are a couple and you'll be able to earn more than 44K, they will tax you 85% individually on your social security that you earn. So why do you even take the trouble of depending so much on your social security? You go to Walmart, a lot of people have retired. They are still standing at the entrance saying, good morning, how are you? Because the social security that they are earning is so much tax that is not enough. Now, this is one of the most emotional slides that when I am sharing it, because I have a story to tell about this. How many days forward could you survive if you stop working today? That's the question for all of us. What about if it is chronic and critical illness? The chronic illness is, what about if the person is not able to do 2 of the 6 activities of daily living? How many days forward would you survive? Not only losing your job. And what about critical illness? Stroke, cancer, end-stage renal failure, blindness, paralysis. Just think about it. All of us, we pray and we want to grow up to 100 years. But the fact is, we eat, we drink water, and our bones will get crampy as we get to 65 and above. Things get difficult. There are a lot of things working and lingering in our systems that we don't have an idea. We don't even have an idea. Now, so in this country, when you are sick of any of the diseases I just mentioned, the chronic and critical illness, and your health insurance is not able to cover, and you go to the government that you need help, do you know what the government does? They go in, they check all these red check accounts, your checking, your savings, your CD, your 401k, 403b, TSP, IRA, Roth IRA, even your stocks, Bitcoin, and crypto. The annuities, I told you we have the qualified and non-qualified. They also checked your qualified annuity. Life insurance, as I told you, they don't check that one. They don't check your non-qualified annuity too. Your bonds, they check it. Even your child's college funds, they check it sometimes, depending on which state. And then they tell you, you know what? Go and spend all the money in these red check accounts. When you are left with 2,000 or less than 2,000, come back and we help you. So at this juncture, what do? Let's assume they don't only spend all the money in this account before they come, they ask you to come back for help. Even 5 years ago, whatever money you spent, whether you took it to Africa, whether you went to buy a house with it, or whatever, back home, they will trace it and make sure that you spend every money in this red check account, including whatever you have, even your mortgage. And then they tell you, come back and they will help you. So now that you know where they will ask you to go and spend all your money, when you are left with less than 2,000, come back and we help you. Where would you like to save, grow your money? That is the question for all of us. So now, life insurance living benefit versus disability insurance. So, Mr. Allen, these two people who is very, very ill, the one in the ICU and the one in clutches, who is very, very ill?
I think the ICU.
Thank you, thank you, thank you. All of us, you bear with me that the ICU is one of the expensive hotels in the United States. Why? You don't have an idea how much they pay the nurses and the doctors when somebody is in the ICU. You don't have an idea. So by the time you leave the ICU, you know how much the person is accruing in debt. Now, the lady in clutches can go on disability. In this country, disability insurance is 3 to 6 months, correct? So,
Okay.
and it's 60% of your money, your monthly salary, correct? 60%. Even if the 100 is not enough, will the 60 be enough? So, if the person is in ICU, that makes the situation worse. They'll just come. Anyway, Mr. Allen, do you do overtime at work?
No, I don't.
Okay, thank God. So, if the person is in this situation, John was working, hard working, doing all the overtimes, team player, they'll just bring you a card. Thank you so much for working with us. We already got somebody to replace you. Meanwhile, if you get well, you can come back. So at the close of the day, in this case, if John doesn't have an insurance that will cover these bills, what would John and the wife do? So with the life insurance, with the living benefits, if the person is sick of heart attack, stroke, cancer, end-stage renal failure, ALS, major organ transplant, blindness, paralysis, central nervous disease, first chronic angioplasty, first chronic artery bypass, AIDS, and the person is not able to do 2 activities of the 6 activities of daily living, you'll be given a portion, 90% of your face amount to take care of you whilst you are alive. And if the person is declared by the doctors that the person has less than 12 months to live, 100% of the face amount of that life insurance is given to the person to take care of himself whilst he's alive. Now, estate and probate court system. Mr. Allen, if I should ask, what is estate?
Basically the assets that are left, or the assets and liabilities that are left over after somebody passes.
Thank you, thank you. That's very excellent. Thank you. So estates are bills when we are alive. They are bills that we owe. Your credit card debt, your mortgage debt, your school loans, and the loan that maybe you took from the bank. Those are estates. When the person passes on, it becomes what? An estate. And they are your bills. When the person passes on, it becomes an estate. So in this country, and even in my country, Ghana, there's a probate court system. We have this in Africa. So now, if somebody passes on in this country, they make 4 calls, 1 to the family, 1 to the funeral home, 1 to the state, and 1 800 number. As soon as that 800 number goes through, you know what? They get access to all the person's accounts, your checking, your savings, your CD, your 401k, 457, TSB, 403B, IRA, Roth IRA, even your stocks and Bitcoin, except your index annuities and life insurance, even your bonds and the college funds. They freeze all your accounts. And what do? They make sure that they take the dead person to the probate court and make sure that the person pays all the debts that the person was owing, the mortgage, the credit card bills, the school loans, all those that the person is owing before passing on. The person has to pay, they have to pay all those debts. The probate court pays all those debts from the person's account that they have frozen. And then at the close of the day, that takes about a year to what? To 2 years for that person to go through probate. And it is very, very crucial. They don't even allow the family to get access to any money, even if it's joint account, they will freeze it. Now that you know where your money is frozen by the probate court and where your money does not go to probate court, unlike life insurance and index annuities, as soon as the person passes on, a check is brought of the whole face amount is brought to the family. Now that you know where the account goes through probate and where the account does not go through probate, where would you like to grow your money? Index annuities and life insurance. These are the only two accounts. Now, this is how money grows in this country. We have the fixed, which is the banks. We have the variable, which is your 401ks, the variable markets, your stocks, your Bitcoin, which is like the EKG machine. We have the index, which I will be talking more about. It grows and locks, it grows and locks, it grows and locks. It has a floor. I'll stop sharing for a second and just show you. The index has a floor and a cap. If the market is down by negative, your money is locked at the floor of the index. When the market is up, like Mr. Allen was saying, the market has been good the past few months. When the market is up, your money grows to the cap of the index, depending on the percentage. Even if it's up to 50 or 30%, your money grows up to that level of the index. Now, let me go back to share my screen. Okay, so now that you know where you can grow your money and lock it, which is the index, you grow and lock, you grow and lock, you grow and lock. The variable is EKG machine and the fixed is the banks. Where would you like to grow your money? Mr. Allen?
I think it depends on when I'm young. I think I'm a bit more willing to take the variable option because I feel there's a higher payoff. But as I get older, you know, to your point on the first rule, don't lose money. Maybe the indexed or even fixed as you get older. But when I'm young, I feel like I can ride the waves, the EKG.
You want the
I don't know about you, but my money is so expensive right now. I work so hard for it, you know.
So, you know, during the COVID period, people lost about 25% of their 401k. A lot of people lost money. And that is if the person is about to retire and losing, so the person is 65 and about to retire and losing 25% of his retirement, will that be comfortable for that person?
No.
Thank you, thank you, thank you. So now that you know, how would you like your money to grow? Now, types of life insurance. As I said earlier on, we have the group life, which is usually through work, term life, we have whole life, we have universal life, which is the family miracle that we are talking about today. So the group life, the cost is insignificant. It's free. You are part-time or full-time, you get it. Coverage ends when you leave your job, correct? Paid only upon death, mostly at work. So assuming I am working in my office and I have paid, my company has given me life insurance, and I am on break and I cross the street to go to Walmart to go and buy my lunch. If something happened to me and I fall down dead in Walmart, I have to wake up, I have to get up and come and clock in again at my clock, my work clock, before I'll be giving that life insurance. It paid only upon death, mostly at work. That means if you don't die at work, you'll not be paid. No benefit to clients while alive. Illness, layoff, retirement result in end of coverage. 0.9% payout probability is very, very what? Deceptive. It is not even considered life insurance traditionally. Now, term life insurance, it is also what is the regular one that most of us go for. It's very cheap, popular. TVs, banks, auto, and job. That is what we get. It is what? Temporal coverage. We are all praying to grow up to 100 years, correct, Alan? We all want to be 100 years. But most of us go and take 10 years life insurance, 15, 20, 30. What about if the person doesn't pass on? That means your premium is going to get higher. As you grow, your premium gets higher. Only paid upon death. No benefit to clients whilst alive. Premiums will increase when policy terms end. And then lapse if payment is missed. No cash accumulation. Gambling by betting against your life. Most companies end coverage at 65. Mostly if you go and want to renew at 65, your premium will be quadrupled. And that is even if you are lucky for them to insure you again. 2% pays out, 98% never. Whole life. Whole life. It has its advantages. You can pay up to age 100. Premiums remain the same. Cash accumulation may be more expensive. No benefit for clients whilst alive. No cash value guaranteed. Death benefits without cash value. So, excuse me, but we have index. Excuse me, thank you. We have index universal life insurance. This is the family miracle. The advantages are 62 benefits. We'll see later on in the illustration. And the disadvantages, you have to pass a health physical. It sounds too good to be true. We'll see that later on in the illustration. Now, these are the companies I told you earlier on I work with, and you can see all of them on the screen. As I told you, it's 140 plus companies. This comes to the end of our presentation. If you can please text your numbers on the chat. Mr. Allen, if you can capture the numbers for me, and you can also text mine again in the chat. These are all the books that we gathered this information from. You can take a screenshot and order some from Amazon so that you can buy them and read. I'll entreat every child of God sitting here. That is good for us to also have the worldly wisdom in addition, the worldly knowledge in addition to the spiritual aspect of our lives. So let's look at this one too. These are also very good books you can get from Amazon, very cheap. And then if you want to hide knowledge from the public, put it in the books, Now, as I was telling you, the banks, what do? When you put your money in the bank, this is where they take the money. They take the money to life insurance assets. So the banks have what? Bank of America have 19 billion in life insurance. Wells Fargo have 17 billion. Chase Bank have what? 10 billion. US Bank, 5 billion. This is statistics of about 5 years ago. So you can just imagine how about quadruple of this money is in life insurance. Your money is being taken to the bank for them to get interest and take care of their staff and even loan you that same interest again. Now, somebody will ask me, companies that own life insurance, General Electric, mostly we think that it's only people who are going to die that needs life insurance. No, General Electric is a company, AT&T, Nestle, all these companies, Avon, Comcast, Walt Disney, during the recession time went for money from his life insurance account to expand his business because the banks couldn't give him the money he wanted. And this is the Walt Disney that we see today. So what does this insurance do to us? It protects from lawsuits in many states. It is common in many states that the cash value accumulated inside of life insurance policy is protected from creditors. So that is why our president went to file taxes and only lost how much? Our coming president, sorry. And only lost how much? 750 he paid in taxes. When some of us, we work 16 hours and we end up paying so much taxes in when we go and file taxes. Now, the biggest banker of all, former Federal Reserve Chairman Ben Bernanke, has the majority of his liquid wealth invested in insurance products that promise guaranteed rates of return. Why does he have more faith in the insurance industry than he does in the Federal Reserve System? I wonder, ironically, banks are what? Legally required to have foundation of very safe liquid assets known as Tier 1 capital. So life insurance is considered to be so safe that bank regulators allow life insurance policies owned by the banks to meet their Tier 1 capital requirements. Thank you, thank you, thank you. It says here that the 401k by Chase Chandler is for people who are planning to be poor when they retire. Thank you, and you can't go back and change the beginning, but you can start where you are and change the ending. This comes to the end of my presentation. I just want to show you, sorry. This is Scott, who was also ignorant about life insurance, but one of our colleagues came across Scott and introduced this product to Scott. Scott took a life insurance, and in 6 months, he was working in his community, taking a usual walk. And what happened? He started feeling pain, heart pain in his heart. And he asked the wife to call ambulance because he was taking a walk with the family. And when they called ambulance, they took Scott to the hospital, and Scott was diagnosed a heart attack. Not only was he diagnosed and treated, but as soon as this message got to his company, the company that he had protected his life 6 months ago, a check of $353,000 was sent to Scott. So that is why your family needs protection. Our families need protection. So Scott took that money. Unlike other communities that we are, if you think education is expensive, wait until you see how much ignorance costs you. Now, most of our communities, because we love GoFundMe, and most people just ignore life insurance. What happened? In this community, they go asking for GoFundMe when somebody is ill. This is a nurse practitioner who got sick, was diagnosed of cancer. And in the end, he was making susu 1,000 every month. But in the end, when he got sick, he was diagnosed of cancer. What happened? They had to do GoFundMe because he lost his job. He couldn't go to work because he was sick. And in the end, GoFundMe in the community. That is all we want to end. In the end, she only got 1,132, which is very low. Thank you so much. I'll bring my program to an end. We have the next section that will go to, which due to HIPAA, it is putting in numbers. So with that one, I don't think time will permit us, correct, Mr. Allen?
How long do you think you would need if you wanted to do it? How long do you?
Maybe about some 25 to 30 minutes, probably. Will it affect your time?
We usually
Because,
try to stop at 9, but I'm trying to think. We may.
yeah, I want
let
to
me come
take
back to you.
appointments.
Yeah.
I want to take
Yeah.
appointments and do one-on-one.
Okay,
So that,
that's better.
yes, I don't want to run into your time. I'm very cautious of time. Yes.
Alright.
So you can also take my number, as I said earlier on. I think I texted it on the chat. Did I?
Yes, you did, and I've put it in again in the
Yes.
chat.
Yes, that's my number. And if you are here, you also want to text your number in the chat, you can text it. We can take a few, 1 or 2 questions if it is not related to HIPAA violations. Yes. So if you are here and you would like to ask a question, we can take about 2 questions. Our time is almost up. We have 9 minutes. So you can ask questions.
Yes, please go ahead. I think that's Pastor. Pastor, please go ahead.
Okay, Pastor, go ahead.
Thank you so much, Auntie Joyce. It was amazing, great presentation. We really, really appreciate it. Quick question. I wanted to find out with the annuity.
Yes, sir.
What is the minimum amount somebody could open that type of an account? I don't know if you mentioned it or not. And then
yes,
also,
I did. No, I didn't mention the amount. It's 10,000 and above. 10,000 is the minimum.
10,000 is the minimum. And
yes.
In terms of maybe you mentioned it and I missed it. Is there an age limit to which when you can go in and access amount, like take money out of the annuity? Is there age
Okay.
limitations and
So
stuff?
thank you. That's a very good question, Pastor. We have the immediate annuity, which as soon as, maybe if the person is retired, there is no age limit for annuity. You can lock it for 8 years or 10 years. We have even the 7 years annuity. And we have annuity that you can access an income immediately. That means every year you can take money, a percentage out of your annuity account. And then people also decide that they will lock it for the number of years, 8, 7, 8, or 10 years before they get asset, they want the money. So depending on the age of the person, most retirees or those who have retired, normally they can get immediate access to the annuity annually. Yes, that's what I know. Yes.
And does it affect the growth in terms of the years in which you could lock in?
In fact, because it's a plan that has been put in place for you to, if the person wants an income, an annual income, a percentage of that money will be given to the person, but it doesn't affect the growth. Whatever growth is growing, if it's the first time you put in the annuity, you get your bonus, your 30% bonus. And if it is 8% interest on your annuity every year, you get your 8% growth. It doesn't affect it. Your annual withdrawal does not affect it. It's only that you get the same growth, but maybe the money in your interest might have reduced. But that will be well explained if the person takes the annuity. Yeah.
All right, thank you.
Yes. Thank you, Pastor. Any more questions?
Nadia,
Nadia.
please go ahead.
Okay, so my question is, which company do you recommend for the life insurance?
Yeah, for the Index Universal, all those companies, but I work with 4 particular companies which have very good interest rates that I work with, I work with often. I work with all the others, but the ones I usually interact with, which have very good benefits as well. Not only the interest, but benefits. Yes, I work with Transamerica, I work with Nationwide, Pacific, and sometimes NatLife. But NatLife, their National Life, their rate is very low when it comes to the interest. So, but we don't talk about that much here. So I am forbidden to say that.
Okay, thank you.
Yes. So when you get back to me one-on-one, I'll do illustration on all of them. The one that you prefer, then you choose. So you can text your number on the line.
Okay.
You can text your number. I think Edato is capturing most of the numbers for me. All right. Any more questions before we leave? Our time is up. It's 9 o'clock.
So I was thinking about, just maybe a question and a comment. I was thinking about the Warren Buffett analogy of, make money and lose money. I remember reading a book about Warren Buffett investment strategy. And some of how he was able to really generate significant wealth was he some really, really good stocks back in, the 70s and 80s and really just stuck with them. For example, he invested heavily in Coca-Cola, or Berkshire Hathaway's company invested heavily in Chevron and Coca-Cola and a few other in Apple later on as well. And in some ways, the best investment strategy is picking those very good stocks that will make you a lot of money. But only God knows what those very good stocks are.
I like that. You see, so if you are not you have not been educated mostly on the stocks, and you don't have the heart to bear the losses in stock, I tell you, a lot of people got sick when the market went down the COVID time. And because they were about to retire, they had to go back to work. And you read these books and you know that it is not a stable market. So if you cannot handle a stable market, why don't you go for the one that is fixed, that you know that even when the stock market goes down and things crash, you still have your money in place. That is my advice to my community. If you don't know too much into it, why don't you just take what you know that even if you have whatever amount you have, your 20K in that Index Universal account, and you know that your money will be locked at the floor even if the market drops, why don't you go for that one? And the annuity for our elderlies who have one way gone for their, if you have an old 401K also lying somewhere, sleeping dormant in that account. Why don't you just roll it over to this annuity that you locked your money at the floor of the annuity, of the index, sorry, of the index. So I believe if we are able to rather get most of our monies into the indexed accounts, and maybe gamble with the little that we have, the other gamble in the stock market. But if you don't have the heart to gamble, why do you want to even go in there? Thank you so much, Mr. Allen. Mhm.
Thank you very much,
Yeah.
Mrs. Joyce Ansong. Thank you, Mr. Jerry Ansong. That was, I've seen a lot of financial presentations.
Mhm.
I thought the way you went through that was very well done.
Thank you.
Thought it was easy for an average person to digest if they were paying attention. I like how you went through the different criterias of, what are the rules, minimize your tax, minimize your fees, accessibility, beat inflation. Like it was very systematic. I
Yeah.
know we record the video, but I think for those that decided to join today, I thought it was really good. I'm not just saying
Yeah.
that. Well done. So thank you, Mrs. Joyce. And so I know that if we had more time, you could even go through it more slowly so that people really get it.
Yes, the second session is the figures, where we put in figures for you to know how much one can afford when it comes to this account. So with the figures aspects, it is always good to do it one-on-one.
Yeah.
So you take my number in the chat, you call me. I can even call you if you give me your number. Elder, can you capture the numbers for me?
I have sent you, I've already WhatsApp you some of the numbers.
Okay, okay.
So
Thank you.
Elena, Nadia, I think there was another number. I've sent those numbers directly to you, but I'm also
Yes.
sending it to them so that they will reach out directly to you as well.
Yes. Last time one of our mothers reached out, he said we didn't post our number on the chat. So today I don't want you to miss my number, so that if something crosses your mind and you also want to know how much you can afford in doing this Index Universal Life or the annuities that Pastor asked, please don't hesitate to call me for us to do one-on-one, because I don't want anybody to know your age and how much you earn. Yes. So we want to keep it as much as private, and then we can go on from there. Thank you so much, everyone. Thank you,
very much.
Pastor. Thank you, everyone on this call.